Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Friday, July 24th. So now this is important specifically because it's Nick Timiraos. Remember, Nick Timiraos was the person who really, if the Powell Fed wanted to leak something, it would come through Nick. And that was really useful tool, and they really helped Nick's career. He wrote a book on Jay Powell and the Fed. And so Nick always had the inside track for sure. Now, Powell is no longer Fed chair, and he's been very quiet the way that he intends to be, but that doesn't mean he's not still talking to Nick Timiraos. So as long as Powell is on the board, I think, you pay attention to what Nick is saying. And Nick is saying that, and this was out yesterday, the Fed is it's one of the least predictable meetings in years. Now, I'm not sure if that's true or that's just a little bit of clickbait to get people to read it, but there's a renewed oil shock. The hawks want to raise rates, but inflation has come down, and we have two pretty weak inflation numbers, weaker than expected. CPI and PPI in the last employment report was also weak. So, sort of the data is not as strong as it was in June, but nobody really knows how Warsh leans, which is I think the way he wanted it. Now, according to Timiraos, the officials pressing to raise rates are the more insistent, and a few of them potentially dissent if they don't move rates in July and next Wednesday. But some influential policymakers last week suggested they were inclined to hold, and I think that's John Williams and Christopher Waller, two really important guys. So last month, half of the 18 of Warsh's 18 colleagues expected they would need to raise rates. The other half thought they didn't, and Warsh didn't indicate on the dot plot. So, the chief economist at UBS says, Warsh could potentially tip the board to the way that he wants. Now, Dean Mackey, who was was previously at a bank, and I knew him, and the chief economist at hedge fund Point 72 Asset Management said the data have been more favorable than what the Fed had in front of them in June. It would be strange for the Fed to respond to that set of data by hiking when it chose not to in June. What's interesting is Warsh, Williams, and Jefferson, John Williams and Philip Jefferson, the vice chairman, formed the Fed's policy steering group known internally as the Troika, or three people. Under Powell, these two vice chairs built support for a policy proposal, so that basically the Troika felt like they were strongly leaning one way or the other, and they basically sold what they decided on. This Troika has continued to meet, but it is not what it was before, and it seems that the new Fed chair actually doesn't mind an open meeting. I still think, obviously, that rates are not the right tool in this environment. Inflation might be going up, but purely driven by oil, not driven by a really strong economy, so it is not the right tool. Where are the markets today? Well, I think the most interesting thing here is energy, which has gone, just jumped up and up and up like that, is down a decent amount today. WTI and Brent down over 4%, gasoline and heating oil down too. And what this suggests is this rally has been driven heavily by speculators, thinking that the war is not going to end anytime, the escalation is not going to end anytime soon. And they've been just buying oil and doing really well because who's going to stand in front and sell it, right? But over the weekend, you don't know what will happen. I don't think so. I don't think the market really thinks so. But if there is some sort of truce or some indications that they're talking, if you're long oil, you would come in, with no chance to hedge, and it's $10 lower. And I think that gap is why people are selling it here. If the escalation continues, I think they'll just buy it back next week. But that tells you that the market is positioned quite long oil, and it's mostly speculators. With oil lower, yields, bonds rally for really the first time this week. The dollar's down a little bit. Stocks are generally, a lot of breadth up. Metals are up. We had a tough day in gold and silver yesterday. I still like this one. I think we're close to a base. But crypto is losing a little bit of momentum. I think this is a little more profit taking here. I don't want Bitcoin to drop too much more because it was on a nice trend as we looked at a couple of days ago, and hopefully that continues. But a lot of it is, maybe based on the Clarity Act. It is, still uncertain whether or not it is going to get through Congress. Okay, here's the S&P. You can see the little bounce here. A lot of breadth. Tech is down a little tiny bit, but everything else is up. And you can see here without tech, without tech, this is comm service and everything else. There's a lot of green on the board. Okay, now looking at this because I want to get a better sense of President Trump's mindset. He will meet Israeli Prime Minister Netanyahu at the White House on Tuesday. Netanyahu's been looking for a meeting. He's finally gotten one. Part of it pretext is he's in for Senator Lindsey Graham's funeral. Graham was popular with a lot of American allies. So they're going to meet on Tuesday. At the same time, President Trump is considering resuming major combat operations that could include a joint military campaign. So this, he could be meeting with Netanyahu to discuss things. Some people say the fact that Netanyahu is coming to Washington could signal that no significant escalation could take place before then. Yes, but in previous rounds of escalation, both the U.S. and Israel issued statements about high-level visits as part of deception efforts ahead of military strikes against Iran. So probably doesn't tell you very much. Now, this, I think, is a good piece. Wall Street Journal, talking to a lot of internal administration officials who remain obviously anonymous, they said, and you can see it, we've gone over it under Truth Social posts. During a recent meeting in the Oval, Trump launched into a tirade against Iranian leaders, calling them scumbags and lunatics and a series of curse words. So what their administration officials and others close to the president are saying, that Trump is increasingly frustrated that a conflict he once thought would be over in a matter of weeks has dragged on with no end in sight. In recent days, he's grown skeptical the negotiations with Iran could produce a lasting peace, and that the only thing Iran understands is military force, and that he was in revenge mode against Iran. So in the meantime, U.S. is surging forces, medics, planes, weaponry to give Trump more options, or it could just be for show. But this is important. Trump, as the war lingers, Trump has complained to advisors that it's difficult to know who speaks for top leadership. And every time the U.S. thinks it has made progress at the negotiating table, Iran has continued its attacks. And this is perhaps the most important. Trump is less focused on the midterms fallout than his advisors and Republicans in Congress, according to people who've spoken to him. Obviously, Trump is not going to run again, but losing both houses of Congress will make life much more difficult for him in the second half of his term than if he only lost one, and obviously if he kept both. But Representative Michael McCall says I believe he thinks he gave peace a chance. He's going to Plan A, which is a military operation. So what this means is there may be no more tacos, no more Trump always chickens out, at least in the short term. So, I think oil remains high, and we may see more escalation. If he's going to do it at any time, he's going to do it now, because he can't really do it in September. When the election really focuses everybody's mind. Okay, Brent, you can see down 5%. As we mentioned before, I think this is speculators getting out and waiting for next week to buy again. Finally, Bloomberg reports that Intel's revival takes shape with the AI-fueled data center boom. They had they reported earnings after the close yesterday, huge earnings, like double Wall Street expectations, and their sales projections are bigger than what the market thinks. So good forward guidance. And basically, while NVIDIA remains the dominant provider of accelerator chips that train AI models, a lot of, central processing units, you need these machines to basically run AI on people's desktops. So in data centers, the CPU is taking off, demand is outpacing our increasing supply, and those are good problems to have. Intel is investing, I think from $15 to $20 billion, up from $15 to $20 billion in capital expenditures. And this is really good for Intel running the systems. Data center segment up 60%, double the pace of overall revenue. Profit great, revenue great, gross margin up to 40%, up 13% from last year. That's huge. That's where all the earnings are coming from. Now, in the when it was Intel Inside as recently as 5 or 6 years ago, when you wanted an Intel chip and not an AMD chip, their gross margin was 60%. So it'll be some work before they get back up there. But what's interesting is Intel jumped more than 10% in the post yesterday. We closed around 100, was trading at 112, I think I saw. But now it's 4% lower, suggests there's a lot of profit taking. So does that mean that you get a second bite at the apple? Well, here's Intel, and this is where, remember we talked about it, I was long Intel for a long time. I sold it right here because I said, you know what, we are at basically almost all-time highs. I don't know how much higher we can get. They had really good earnings last season and that gapped and we never got a chance. So took profit too early there, but now it's kind of crept back down. And, it's lower than where it was after, amazing earnings, and you never really want to see that. So I think these are longs taking profit. They're looking at this and saying, you know what, maybe we'll take some profit. Does this mean, you get a second bite at the apple? You missed it here and you watched it go higher. Well, it's still not cheap. The forward PE is 59, but then AMD is right there at 61. So, I wouldn't go whole hog and buy a chunk of it here, but if you buy all your whole allocation. But if you want to buy a little here, if we correct a bit more, you want to buy some more. Maybe this is a second bite at the apple, and it is AI driven, but AMD and Intel looks like they're around priced relatively similar. Okay, earnings. We had Intel after the close. We just talked about that. SAP, Newmont, SAP software near the recent lows. So, a big jump in, 9% is pretty good for them. Newmont, missed on revenue, but gold's a lot lower. I think the market's forgiving them for that. CATL, that's the Chinese battery maker, actually had really good earnings. I didn't have the data specifically, but they're up about 1%. American Express missed on revenue, down sharply. Verizon missed on revenue, but they like to turn around, so it's up 3.4%. And finally, Charter, which we've looked at in the past, I think potentially, they're in the single digits now in PE. They're only worth $16 billion. Somebody could really take them out. Now, they lost a lot of broadband subscribers, even though they met earnings on revenue was right there. They're down 6.3%, but a lot of shorts have been taking profit today. Okay, next week, big earnings week. Microsoft, Meta, SK Hynix, Apple, and Amazon. Thank you so much for joining me this week, and I'll see you again next week.